Michael Henrichsen joins us today. He is a CEO of Goldshore Resources, ticker GSHR on the Toronto Stock Exchange, Venture Exchange. We'll be talking about his outlook for not just the commodity overall, but his strategic vision for taking this particular project, this junior company, to its next step. Goldshore has outperformed gold dramatically. It's one of the few companies that have done that this year. The stock is up 100% year to date. How do they do it? What's next? Michael, welcome to the show.
Thanks for having me. Good to be here.
You're a geologist by background. You've worked many years at the world's largest gold producer, Newmont. You've told me offline about your story transitioning into the junior space, so we'll talk about that. I'd like to tap your brain and educate us on how to pick projects today from a geologist's perspective. But first, let's talk about this concept that's been discussed a lot in the media over the last couple of years, peak gold. We know about peak oil, the concept that perhaps the volume of oil production has peaked. The same analysis, one could say, could be extended to gold in the sense that the amount of gold that has been found so far has been sort of maxed out in the sense that the volume of production going forward can possibly decline, and perhaps the rate of change of discovery, or the rate of new discoveries, will also decline. Is that happening?
Yeah, look, it's certainly getting harder to discover new ore bodies. There's no doubt about it. Some of the easier ones have obviously been found. Now it's where are you going to find them? For me, it's all about jurisdiction. You want to be in a jurisdiction you're comfortable with. We can go to far-flung areas of the world where there may be a lot of potential, but there's obviously a lot of jurisdictional risk associated with that. So with respect to, are we seeing peak gold? We could very well be. What I can tell you is it's getting harder and harder to find sort of potential tier one assets in good jurisdictions. That's the truth.
Well, so as a geologist, you're looking for assets with not only a substantial amount of high grade gold, but also in jurisdictions that will yield a reasonable return for whatever company you're looking for or working for, and the investors, meaning it can't be too inaccessible and it can't be too expensive to operate in. How do you strike that balance?
Well, look, I've had the opportunity to work in sort of, I think it's 40 countries worldwide, and I've seen all sorts of problems play out. I think for me at this stage of my career, if you can be in a tier one jurisdiction like Canada, like Goldshore, that's a huge advantage to you. There's certainty in terms of tenure. We know what we're going to have to do from a permitting perspective. And I think investors can feel quite comfortable with that. So that to me is the distinguishing feature that I now look for. I've been across parts of Africa and various other parts of the world that are difficult. They're inaccessible. They're hard to understand the regulatory framework. So, to me, this is the safest place to put your efforts and your money, is in a place like Canada, no doubt.
How does Canada differ from, let's say, a jurisdiction like West Africa in terms of not just the availability of deposits, but also the ROI from a drilling perspective?
I mean, West Africa for gold is an amazing jurisdiction. I spent a lot of time working there
Yes, I know. Yeah.
so I have very fond memories of some discoveries that were made there. But when you look at some of the places I visited over the years, Burkina Faso or Mali or Guinea, these are tough places to operate in now. Security is a major issue. Again, it just brings me back to want to being in Canada at home, because here it's a very simple process. You go to work and you know what to expect. There are not going to be those kind of surprises that you would otherwise potentially find yourself in.
What kind of surprises are we talking about?
I mean, for West Africa as an example, I mean, Burkina Faso is, from a security standpoint, is a tough place right now. There's been some issues with respect to mine workers, running into guns, and obviously nobody wants that. So I think it's really a question of understanding the region you're in. If you go to South America, one could argue that some of the political changes that have happened over the years. Peru has become harder to work in over the last 5 to 10 years just because of left-leaning governments. So you just have to find yourself in a spot where you're comfortable. Whether you're an investor or you're working on a project like myself, it's really important to just understand where you're placing your time and your money. And I think to me, that's not often considered enough. You can get some splashy numbers, some great projects, but if you're in the wrong spot, it won't help you.
Let's identify a wrong spot then. I mean, you can give examples if you like, but generally speaking, how would you define a wrong spot?
I think for me, I look to, can you be sure of security in Burkina and Mali right now? Probably not. That would be a tough place for me personally. So that's how I there's no wrong spot, David. I mean, people have been successful in all of these countries and will continue to be successful in all of those countries, but it's the degree of difficulty that you have to look at. And that's where I've kind of come back home ultimately, to work in Canada. I want that degree of difficulty to be decreased. I want to be in a framework where I know how to operate and it'll be secure for the years to come.
How is the permitting process in Canada different from a third world country?
Well, I think at the end of the day, we know the steps that we have to take. And I think the regulatory framework in some third world jurisdictions is fine. It's not like you can't do it. I mean, we have majors operating in all of these jurisdictions. I just think it's a question of, are you going to be surprised? That's
Is
really
it generally faster? Let's put it this way: faster and or easier to permit in Canada, or let's say the U.S. than let's say South America, Papua New Guinea, or West Africa, for example. I mean, that presumably would play into a role in deciding where to operate, right?
Yeah, certainly. I mean, each project's going to have its own challenges, right? I mean, there's no doubt about it. So it's sort of project specific in terms of how the permitting will go. I think again, for instance, if you're in the midst of permitting and you had a good relationship with a government, like say in Niger for uranium, as an example, and then all of a sudden you find yourself with a very different political outlook. All of a sudden, that can wipe you out in a heartbeat. So I think that's, again, I just come back to steadiness. It's not so much the time frame; it's, are you going to be surprised? And that's what I'm trying to avoid in my own career and for our investors.
Okay, what happened this year with the share price? It's up 100%. We know the gold price is up significantly, so clearly there's a leverage factor. But like I stated in the introduction, not all companies in the gold sector have outperformed gold. What did Goldshore do differently, if anything?
Well, I think for the start, we were just completely undervalued. I mean, we all know the kind of market we've been in. It's been atrocious. And there's just a massive disconnect between Goldshore's share price and the value of the ounces in the ground. Um, that was recognized by a strategic investor called the SAF Group in November of last year. They just saw this disconnect. They saw the asset just off the Trans-Canada Highway in Ontario, and they said, "Okay, we have to invest in this. There's just too much. It's such a deep value play." And then from that, kind of coming out of hibernation, the company's getting active again. We're moving forward. There's a new management team. Obviously, I've come aboard May 1. That's probably why you're seeing that. We have that strategic backing with a great asset.
You told me offline that if you were still on Newmont, working as a geologist there, you would probably take a look at the Moss Gold project that Goldshore has as a potential strategic investment or buyout opportunity. So before we talk about the project itself, what are the criteria that a major gold producer has on their checklist?
Scale is obviously the starting point. Major's not going to go after a 1 million ounce deposit. That is absolutely a fact. What you want to see is something probably north of 5 million ounces to really have the attention of a company like a Newmont or a Barrick. I think also being in what I call a tier one jurisdiction, like a Canada or the US, that obviously is extremely helpful for the reasons we've just been talking about. And I think you also have to look at, does your project have some optionality? Can you see good economics early? That's obviously something that everybody's wanting to look at. And those are the checklists that people will want to see. If you can demonstrate some good economics early in the mine life, if you're in a good jurisdiction and you got scale, of course you're going to be on people's radar.
Okay. So walk us through how Goldshore fits that criteria.
Yeah, absolutely. I mean, it kind of comes back to how did I make my decision to come here, and it starts with the assets. So first off, we have a resource of 6.7 million ounces, 6 million of which is contained in a single conceptual open pit. We are exactly about 110 kilometers to the west of Thunder Bay, the city of Thunder Bay in Ontario. You drive down the Trans-Canada for an hour, or you take a left, and there you are. Extremely easy to get to. The infrastructure is beautiful. Um, those are just the scale and the infrastructure alone set Goldshore apart to my mind. And then the other thing that really is set it apart for me is just there's some low-hanging fruit for growth, right in and around the deposit. Currently there's 6 million ounces in this conceptual open pit. Does it get bigger? We certainly think it does. We've already started our first drill campaign since I've arrived here this last week. And there's low-hanging fruit where we can add ounces into the top 200 meters that are going to be high margin ounces ultimately, that can impact the economics of this project going forward. And then I think the other aspect of growth that we need to look at is, everybody is going to be looking like a major to go back to what would be their criterion. Well, what's the blue sky? Are you sitting on 10 million? Are you sitting on 12? Are those possibilities? Is it reasonable to ask that question? And certainly in Goldshore, the exploration picture is quite immature given the size of the deposit.
Here's my obvious question, okay? As a potential investor looking at this stock, it's already up 100% year to date. Has the window been passed for a buyout? I'm a major looking at this. I'm like, well, I could have bought this last year. Now it's double the price. What's your answer to this?
Oh, we're still undervalued. I mean, I think for a major to come in and whether it's a strategic investment or, if they were looking to buy, they're going to want to see those first set of economics come out, right? And that's what we're doing. We're launching into the first economic study, a PEA. We're going to be quite rigid with this in our approach. It's not a marketing document. We want it to be realistic, which will give that guidance to majors, et cetera, and to the investors for that matter. I mean, at the end of the day, we're still undervalued. It's $10 an ounce in the ground right now. And if you look at some of our peers, they're trading anywhere from, 20 to 60.
One of the challenges I've seen some other juniors face this year is, of course, fundraising. Even with today's gold price near $2,400, they're still seeing challenges fundraising. And in fact, diluting the share price, or diluting the shares rather, has caused the share price of some of these companies to take a hit. How would you, I guess, approach this problem or avoid a similar situation?
It all comes down to the strategic backing that we have with the SAF group and Brian Pace Braga, who's an entrepreneur in the mining space who's had a number of successes over the years. That sort of financial stability that they're going to help us with in terms of lead orders moving forward, that allows us to sort of rise above the typical scenario. That comes back to my first point. I mean, juniors need strategic backers these days. That's ultimately how they're going to perform better. And obviously, we're very sensitive to dilution. We're not going to go out and raise money at current share prices. We feel we're still undervalued. And so our job is to have some catalysts come out to the market to show the growth, to show some very positive economics and raise money at higher prices. I mean, I know everybody says that, but ultimately strategic backing is critical in my mind.
Let's talk about the company finances right now. So how much cash do you have right now, and what do you plan to do with this?
Well, we roughly have $3 million in the till right now. There was $1.4 million worth of flow through. So, we were starting to execute on a short 2,500 meter drill program. That program is designed to test zones immediately adjacent to, the open pit that's defined by the mineral resource estimate and just show growth immediately. With that strategic investment that SAF made and the principles around SAF made in November, there are warrants attached to that. I expect that money to come in, within the next couple of months. And what that will provide us is a good cushion. We're not going to have a gun to our head to raise money. That's also another really important part of the junior space. as soon as your treasury is low, financing gets extremely difficult, and you're going to see lower share prices. Again, to know that we have approximately $4 million of warrants that are going to come in safe hands, strategic hands, long-term hands. That just makes our job easier on the financing perspective, and also from keeping dilution to a minimum.
Okay, well, you recently stepped into the shoes of CEO, so congratulations, Michael. Tell us about what your strategic vision is and what you plan to do differently than, I guess, the previous management team.
Well, I think, look, to step into this role, you just have to quickly take a look at the people you've got involved in the project. You've got to take a look at the asset, and you got to take a look at how do you create value in the shortest amount of time possible. So for us, there's really three pillars. We've got the growth pillar right immediately adjacent to the deposit. Of course, we want to define ounces in the top 200 meters, improve your economics, reduce your strip ratio, have the ability to feed higher grades into a mill early. We have the blue sky discovery potential. Again, does this thing go to plus 10 million or 12 million? Of course, we want to find that out. So we'll be working towards that sort of discovery in the next couple of years. Economic study has to come out. People need to know, what's this thing worth? What kind of rate of return are we going to see from this thing? That has to be defined. And then finally, the third pillar of the approach is you got to take care of your permitting process as if it's your baby. We have to be proactive as to how we engage with that process, because you don't want to not proactively make a decision and then find out, okay, because you didn't do some baseline work, you're delayed by 2 years. No investor wants to see that. So we're just taking the approach of, we're going to try and move this forward in growth, the economic studies, and the permitting simultaneously, never have a delay on the permitting process. And that gets us to the construction decision ultimately.
I've heard that in 2011, there was a trend of, I guess, overspending from the seniors on projects. Many seniors made mistakes when purchasing projects. Perhaps this bull cycle, they're a little more reluctant to repeat some of those mistakes. And that's why we're not seeing as much M&A. Where do you stand on this topic?
I mean, ultimately, I think majors we're going to see an M&A cycle. They're getting flush with cash here. There's deep discounts in the junior space, and it's just going to take a good project, obviously. And you're right. There's been some wonderful acquisitions, and there's been some ones that have been problematic for people. So I don't think it's across the board that you can say, okay, every acquisition's been terrible. In fact, there's been some beautiful ones.
Yeah.
The job of the junior is to make it easy for a major. And I think that's where, my experience working for Newmont, and our VPX, he's also ex-Newmont. This is his 10th development project around the world. That sort of gives us the ability, okay, we know what they need to see. We know the style of work that they're going to want to take a look at. So let's get there fast. That's the advantage of working together with a former Newmont person as well.
Well, tell us about your experiences as a geologist. Tell us about how the process is for a major company to explore. And in particular, what are some of the mistakes that a major company producer like Newmont has made when it comes to exploration that you as a junior would strive not to repeat?
Yeah, I mean, I think juniors, obviously, we're more nimble for a start. I mean, there's quite a large amount of bureaucracy in the majors, which, soaks up a lot of money. In terms of some of the techniques that I've learned at Newmont, of course, I'm going to apply them. They're the standard. So I think it's just a mix of knowing, what to apply in terms of techniques of exploration, and to just, what a junior can do that a major it might be a little slower with a major is we get to the drill bit quick. Like, I just got here and we've got a drill turning. That's a real advantage. We're not fighting a global budget scenario, which I used to do, where you're pounding your fist on the table saying, no, my jurisdiction's better. Our projects are better than the others in the company. So, we've just got a singular focus. I think that's a big advantage, truthfully.
Look, I go to these trade shows all the time and I see rows and rows of juniors, and they all claim to have the best project and the best deposit in the world. All right. So, what do you have that makes you stand out?
Scale, infrastructure, and strategic backing. Simple as that.
Okay.
If I was going to do it in a sentence.
What's the next step in your timeline here? You mentioned you have a PEA in the process.
Yeah, we hope to get a PEA out no later than the end of Q1 in 2025. It might be a bit earlier. That document to me is absolutely critical as it defines not only the first sort of realistic set of economic indicators of what this asset can do, but also from a permitting perspective, it allows us to move forward. So that document's going to be critical. At the same time, of course, we've got low-hanging fruit in terms of growth. So we're going to go execute on low-hanging fruit all day. We're following up on historical intercepts that are right adjacent to the pit that weren't part of the mineral resource estimate, that we can then get a new estimate done, feed that into the next economic study, which would be a pre-feasibility, and carry on. You're right. Every junior, of course, is going to say, we've got the best. The question is, can you go execute? And in these choppy markets, that's been obviously very problematic. And we've seen, massive discounts on companies because of it.
Okay, so you've got let's comment on the capital structure for the viewers here. So you said you have a strategic backer. Roughly what percentage of the shareholder um, distribution is owned by this backer versus the public versus management?
Yeah, so if we take it very broadly and we say, okay, insiders, strategic backers, and people who are very close to us, that's
Hmm.
42% of the company that we can fit into a room practically.
Okay.
So that's a big differentiator right there. And with respect to, we have two insiders. We have Lutri Investments and we have Brian Pace Braga, who are insiders who own over 10%. So we've seen their buying in the market here over the last month. They are extremely supportive.
Getting a little bit more technical now. I noticed that this is an open pit mine, correct?
Yeah.
Generally, is there a preference from a geology perspective or geologist perspective as to whether or not you should be operating in an open pit mine or versus underground? Are there major differences in costs, benefits, so on and so forth?
Yeah, I mean, underground mining is obviously more expensive to execute on, so you got to see higher grades. Continuity of mineralization will be absolutely critical in an underground mine. Where you're dealing with a big bulk tonnage open pit, it's probably a bit more forgiving. And obviously, that's why you see the capacity of these mines to produce at lower grades. I think at the end of the day, when you look at an open pit mining scenario, what you and everybody else should look for is, are you going to be able to get high grade into the mill early? Because that payback period is critical on your capex, the return of capex. So that's what we're trying to do here in our first PEA, is to see, what exactly that looks like. Internally, we feel that we are going to see some higher grades go into the mill early on, and that's going to be a huge economic differentiator.
Assuming no bids come before then from other companies, but at what point would you look at your indicated or um, your indicated reserves and say to yourself, look, this is looking good. We're ready to go into production.
Well, you got to go through the steps, David. I mean, I think, all your economic studies, obviously the permitting is mission critical, community relations saying mission critical. For me, what we have to do is we have to scope the project properly. And, we can potentially look at a phased production approach, smaller scale stage one pit, and then expand to a much bigger production scenario and take a much bigger part of the resource in a phase two. Those are the kinds of things that are going to differentiate us at the end of the day. That's the job we have at hand right now.
Finally, are you looking to expand into other regions, maybe outside the Moss project, at another deposit in Ontario or BC, perhaps? I'm just throwing out places, but are you sticking to one asset for now?
Look, obviously we're always looking. I mean, every geologist is always
Sure.
looking, and particularly if we can see some currency in our share price where others are lagging, and maybe there we can be opportunistic. Of course we would. I mean, we're here to build a gold company at the end of the day. We're here to get towards a construction decision. And if there's opportunities along the way, uh, that are creative, then absolutely we're going to take a look at them.
Okay, very good. Thank you very much. Michael, tell us where we can learn more about your company.
Well, you can take a look at our website. Obviously, we have a big social media presence as well. Uh, the standard sort of places, David, at the end of the day, but goldshoreresources.com.
We'll put the link in the description down below, so make sure to follow Goldshore Resources there. Thank you very much for your time, Michael. We'll speak again next time.
Yeah, thank you, David.
Thank you for watching. Don't forget to like and subscribe.